Good morning. As we look at the board on Tuesday, November 4th, 2025, the U.S. markets are currently closed, but the story for IRES Energy, ticker IREN, is the explosive move from yesterday's session. The stock finished Monday's trading at $67.75. That was a gain of $7 on the nose, pushing it up a massive 11.52% in a single day. The volume was simply enormous, trading over 80 million shares, which tells you this wasn't a quiet drift up. This was a stampede. The stock gapped up at the open to $73.07, hitting a new 52-week high of $75.73 before fading a bit into the close. Now, the common expectation, the one that most people have when they see a Bitcoin miner like IREN rocket higher, is that Bitcoin itself must be screaming towards a new all-time high. The assumption is that this is just a leveraged play on crypto, something volatile to trade on the Robinhood app or SoFi Invest to catch a quick wave. But here is the reality, and it's what's separating the casual observers from those doing the deep analysis. That 11.5% pop likely had very little to do with the day-to-day price of Bitcoin. The reality is that IREN is in the middle of a fundamental, company-altering transformation that the market is just now being forced to price in. The old narrative is dead. This is no longer just a Bitcoin miner. This is an AI infrastructure company, and the rumors swirling around it are big enough to change everything. It's completely understandable why this is confusing. For years, the thesis for IREN and its competitors like Marathon or Riot was simple. You'd look at your Fidelity account or SoFi account, check the price of Bitcoin, and then buy the miner you thought had the best electrical costs or expansion plans. It was an online investment thesis built on crypto leverage, and for a long time, that worked. IREN built a massive world-class mining operation, hitting its 50 exahash target by the middle of this year. They secured low-cost power, particularly in Texas, and focused on using renewables. That alone is a highly successful, profitable business. In fact, their fiscal year 2025, which ended back in June, was a breakout year, posting over $500 million in revenue and its first ever net profit of nearly $87 million. Their mining-only operations are top tier. But that, it turns out, was just the foundation. The real story, the one that's causing this violent repricing, is what they're building on top of that foundation. The expectation is that they mine Bitcoin. The reality is that they are pivoting to compete in the high-performance computing space, directly serving the insatiable demand for AI processing. Yesterday's surge on such massive volume is the sound of the market trying to figure out what this company is actually worth. It's not a miner anymore. It's a data center and energy company that is rapidly becoming a key supplier to the AI boom. Let's look at the evidence. The chatter isn't just chatter, it's backed by company filings and announcements. IREN is aggressively expanding its AI cloud capacity, targeting a fleet of 23,000 high-end Nvidia GPUs, including the latest Blackwell architecture, by the end of this year. They are already targeting an annualized revenue run rate from this new AI division of over $500 million. Think about that. That's on top of their $500 million a year mining business. But the real accelerant and the likely catalyst for yesterday's move is the rumor of a massive contract, with some reports mentioning a potential $9.7 billion AI infrastructure agreement with Microsoft. Whether that specific rumor is true or not, it points to the scale of the deals they are now in a position to sign. This isn't just a small side project. This is a full-scale pivot. They are using their core expertise, building and managing massive, power-intensive data centers in places with cheap energy and applying it to the single hottest market on the planet. This is what's forcing a total reevaluation. This is no longer a stock you compare to other miners. This is a stock you have to start comparing to AI infrastructure plays like CoreWeave. And it's why the analyst opinions are all over the map. You have Cantor Fitzgerald with a $142 price target, seeing the full AI potential. Then you have JP Morgan with a $24 target, who seems to be treating it with extreme skepticism, perhaps still valuing it as a miner or worrying about the execution risk. This transformation is also why the company's financial activity has been so aggressive. You don't buy tens of thousands of cutting-edge Nvidia GPUs for free. IREN has been raising huge amounts of capital. They've been running a $1 billion at-the-market offering, selling shares into the open market to fund this expansion. And just last month in October, they announced an $875 million convertible note offering. This is the definition of striking while the iron is hot. They're using their elevated stock price, a price driven by this new AI narrative, to fund the very build-out that justifies the narrative. It's a bold, high-stakes move. For the self-investing individual, this creates a complex picture. On one hand, the growth potential is explosive. If they successfully deploy 23,000 GPUs and secure major contracts, that $500 million in AI revenue could just be the start. The valuation could completely detach from the crypto market and re-rate to an AI multiple. This is the kind of investment that, in theory, could create massive long-term value, similar to getting into other transformative tech stories early. This is not a simple Apple stock or Tesla stock story where the business model is well understood. This is a company in the middle of a profound change. On the other hand, the risks are just as massive. This is a capital-intensive war. They are borrowing and diluting to fund this build-out. That $875 million in debt from the convertible notes is real. The at-the-market offering adds shares to the float. If they fail to execute, if the contracts don't materialize as quickly as hoped, or if the competition from giant established cloud providers proves too intense, that debt load becomes an anchor. This is the tension at the heart of IREN right now. The expectation for many traders on investing sites is that this is a simple up or down bet. The reality is that it's a bet on operational execution. Can they build out these new Horizon 1 liquid-cooled data centers on time and on budget? Can they manage the incredible power demands? Can they secure contracts at high profit margins? This is the kind of complex analysis that professional desks using interactive brokers are modeling right now, weighing the massive potential against the significant execution risk. It's not a stock for a passive Schwab intelligent portfolio setup. It's an active, high-conviction play. This entire pivot to AI is the central topic, and it brings up a big question about the whole sector. Comment below what you think is the bigger long-term opportunity for IREN: the established Bitcoin mining or this new AI cloud business. I'm genuinely curious to see the consensus. So, as we look ahead, you have to frame IREN with two completely different scenarios. The bull case is that the market is still undervaluing this transformation. The stock's move yesterday is just the beginning of it catching up to the new reality. If that Microsoft rumor has any truth to it, or if they announce another major client, the stock will be re-rated. It will stop trading with Bitcoin and start trading like an Nvidia stock supplier. In this scenario, the debt and dilution are seen as smart, aggressive investments in future growth, and analysts with $100+ targets will look like profits. The company would have successfully used its mining cash flows as a launch pad to become a critical AI infrastructure provider, a move that could be worth many multiples of its current market cap. Many people holding in a Fidelity IRA are betting on this exact long-term outcome. The bear case, however, is just as plausible. The reality might be that the AI cloud business is brutally competitive. IREN is up against giants. The capital burn to stay on the cutting edge of GPU technology is relentless. In this scenario, the $500 million revenue target proves optimistic, or the profit margins are thinner than expected. The massive debt from the convertible notes starts to look dangerous, especially if the crypto market hits a downturn, squeezing their legacy mining business. The stock would collapse from its AI-driven high and fall back to a simple miner valuation, weighed down by its new debt. This is the central conflict. The expectation is a simple, leveraged crypto stock. The reality is that IREN has transformed into one of the most aggressive, high-stakes bets on the AI infrastructure boom, funded by its existing mining operation. The old story is about passively benefiting from the Bitcoin price. The new story is about execution, capital spending, and competing in a cutthroat technology field. Understanding this shift is the only way to even begin